Welcome back to my channel. I'm Victor and I'm a value investor, and I constantly look for stocks that are undervalued, unappreciated, and I think are going to go up in value over time. And today I'm going to cover AT&T. This stock I've covered in the past. I didn't think it was a good investment about a year ago, mainly because their balance sheet had too much debt. But the balance sheet's gotten much better and it's now acceptable in my book. And I wanted to evaluate AT&T and see if it's a good buy at this time, or if I should stay away from this stock. Before I jump into the analysis, do me a favor and like my video and subscribe to my channel. And please leave a comment on AT&T and let me know what you think of the company. I'm going to evaluate AT&T on three general areas. First is really being comfortable with the business, the company, and the industry, making sure that I feel really good about buying this particular stock. Second is take a look at the balance sheet and make sure that it is a good balance sheet, not too much debt, not too much risk. And last is I need a discount on the stock. I'm a value investor. I need a discount to enter into a position in a company so that I could see my investment go up over time, go up in value over time. And based on the answers that I get, I will buy, hold, or sell. AT&T has been around for a long time, more than 100 years. They're mainly known for their wireless business. They've got millions of subscribers, including yours truly. I'm an AT&T customer. I've been an AT&T customer for some time. They are really growing their internet and fiber business, which is very good to see. I think that could be really profitable for them and have a lot of addressable market. One thing they did in the recent years is they spun off the media and entertainment business they had, Warner Brothers. They spun it off and got rid of that business. That was a really good idea. Enabling AT&T just to focus on communication services was a really good move. I'm glad they did that. It also reduced the amount of debt they had on their balance sheet, so it was a double positive. I expect the company is going to be able to operate much better just focusing on their primary business, as opposed to trying to be a diversified company that's both a communication services company and a media and entertainment company. Their last earnings call went really well. They raised their guidance for the full year, showing that their cash flow is back. AT&T historically has been a high cash flow producing company with a high dividend, and their strength is back. I'll be using free cash flow, one of the valuations methods that I use, as well as the free cash flow. Their fiber business is doing great. A lot of fiber ads. And again, this is a very good business where customers add fiber and they stay on the service for a long time, making it profitable for AT&T. Across the board, these even grew their mobility revenues, which is good to see. So overall, just a really good earnings call, which made the stock go up, considerably. But overall, the stock over the last 5 years has been really sold off. AT&T's earnings per share for the next 4 quarters look good. And I'll be using the next 4 quarters as one of the data points that I use to value the company based on earnings per share. And looking at those earnings per share, they have a very low PE looking at the trailing 12 months. I'm going to use a higher PE than 6.7. I'm going to use closer to 14 in my evaluation because I think AT&T is back. They're really running a business that's focused on communication services. Their balance sheet is healthy again. And I think it deserves a higher PE than it has been experiencing over the last 12 months. I believe that AT&T is discounted by 41%. And what that means is each share, I believe, is worth $23.33 if I value the company by using both a discounted free cash flow method and valuing based on earnings per share that I expect in the future, and comparing that to the current stock price of $16.52. Let's take a look at the discounted free cash flow method first. I expect the company is going to produce a little over $18 billion in free cash flow this year. I annualized the first 9 months of the year and got to that 18.2 billion. And I'm going to grow cash flows by 3%, which is reasonable for AT&T. Their terminal value, which is all cash flows beyond year 4, are a sizable amount of 342 billion. And I'm going to discount those cash flows by 9%. It's a little bit higher of a weighted average cost of capital than I would use for a high quality company, just because they're kind of in rebound mode. And it's I'm going to use just a little bit higher weighted average cost of capital on this valuation for AT&T. The value of those free cash flows, net present value, is 291.3 billion. I'm going to add the cash on the balance sheet, but take away debt, and I get to an equity value of $160.9 billion. The market cap is 117.6 billion. So it leaves a discount based on free cash flows of 36%. Looking at earnings per share, I'm going to use the next 4 quarters of earnings per share and use a PE of 12, which is higher than what they have for the trailing 12 months. I'm going to grow those earnings per share by 3%. And I'm going to get a value based on earnings per share of $24.97. compared to the current stock price of $16.52, it offers a discount of 51%. I combined the two, but I put more weight in free cash flows. I used 2/3 of that valuation as the blended and 1/3 of the earnings per share valuation, coming up with a 41% blended discount on AT&T. Looking at where the stock has traded over the last 12 months, it was much higher about 10 months ago, and then it really came down, but it has seen a nice rally coming out of the summertime. So the stock price has really offered up a nice discount about 3 months ago, and it's now at $16.52. I still think it offers a nice discount from the current stock price to where I value the company. So it offers up a nice discount. Year to date, it is down 11.85%, and it pays a 6.7% dividend, which is a nice dividend. Now let me make a decision whether I should buy, hold, or sell AT&T. First, I think the company's really good company in a good industry. I didn't give the management team a passing grade previously, but now they get a passing grade since they really cleaned up the balance sheet and they sold off the media and entertainment business. The balance sheet is back in good health. It's at 3 times EBITDA, which is acceptable. And there's a good, nice discount on AT&T along with a nice dividend. So I'm going to be buying shares of AT&T and building up a nice size position in this company. Hey, thank you for watching the video. Please leave a comment. Let me know what you think of AT&T. Also, please like the video and subscribe to my channel. Thanks again for watching.